Okay, the sound quality might not be as good now, but tell me if that's a little bit better. I'm just talking right into the computer microphone now. Internal mic sounds normal. Okay, well, goodbye to you, fancy microphone. We'll talk to you later. All right, as long as you can hear and see me, then that's cool. We'll keep on soldiering on. Thanks for letting me know about the tech difficulties. Glad to know it's better now. Thank you. Okay, I'll just keep talking right into the computer. So our next question comes from Anthony. Anthony says, can you leave a family member as a beneficiary of your solo 401k? For example, a daughter or son. Can you leave a will or revocable trust? Yes, you certainly can. And what I want to do here is I am going to share my screen with you, and I want to show you this beneficiary designation form. I think it will be very helpful to see how this all plays out. So you've got your plan signature pages. This is probably familiar to you now. If you are new to us, then welcome, first of all. And I'm here on the Solo 401k dashboard, and I'm going to view the 401k signature pages. We provide this for you to make things easier in jump-starting your Solo 401k plan. You know, your 401k is over 300 pages long. It's a real 401k for a real business. So it's got a lot in there. And rather than making you dig through those files and try to figure out what to sign, we extract everything that requires your signature and we put it in this one PDF for you. There's great information in this PDF. We explain exactly what's in your signature pages. We cover how to open bank accounts and brokerage accounts. We make sure you have links to Titan Bank and Solaris Bank's online applications. There's a lot of goodies in here. But what I want to scroll to is the beneficiary designation form. So that way we can cover how to designate a beneficiary. Here we go. So this is the beneficiary designation form. Anthony, this question is for you. You'll complete your information here in the employee because you are the employee. If you have a spouse participating in your solo 401k plan with you, have your spouse complete a beneficiary designation form for their funds. So 2 people in the plan, you and your spouse, you each need to complete a beneficiary designation form so that your estate planners, your heirs know how each of your assets are to be distributed. Little tip here, your account or plan number is going to be 001. You can find that information in your adoption agreement. I think it's on page 3. Your plan number is 001 because you have the first and only 401k plan for your business. Now in the next section, this is where you're going to designate your beneficiary. For most of you, if you are just setting up your solo 401k for the first time, this will be a new beneficiary. So check this little box for new. And then you can put in information about your primary beneficiary, or if there are multiple primary beneficiaries, that's acceptable as well. So for some of our clients, for example, they might want their spouse to have 50%, their daughter to have 25%, their son to have 25%, make it add up to 100%, and include their information as the primary beneficiary. So Anthony, if you would like your son or daughter to be, or both, to be a primary beneficiary, input their information here. If you have a revocable trust or a living trust, you can list the entity information here for the primary beneficiary. Depending on the trust structure, sometimes they don't have social security numbers, sometimes they do have tax ID numbers. The date of birth can usually be a date of formation. Now, another thing is a contingent beneficiary. So this is in the event there are no living primary beneficiaries at the time of my death. This is who you have who receive the assets if there is no longer the primary beneficiary living. So what some clients will do is create who they want their primary beneficiary to be, perhaps a spouse. And then the contingent beneficiaries might be your children or your heirs. So knock on wood, if something should happen to you in the case of your passing, your spouse gets the assets first, And then knock on wood again, God forbid, if something should happen to both of you, the contingent beneficiary is your children. That's who, or trusted contact, whomever you choose to have those assets. I know it can be a challenging conversation dealing with this stuff, but it's really important. Identifying and listing your beneficiaries is really important. It's a part of your estate planning, your generational asset planning. Make sure you fill out this form. Now, one question we get a lot is this notary certification here on the bottom. You only need this form to be notarized if you are married and if your primary beneficiary is not your spouse. What this notarization is for is your spouse has to sign in front of a notary. Essentially, they're giving up their first dibs to your assets. So if you are naming a trust, for example, or if you are skipping a spouse as a primary beneficiary and going right to the kids, then your spouse will need to sign this spousal consent section in front of a notary. If you are married and if your spouse is your primary beneficiary, that form does not require notarization. Great question, Anthony. Okay, next question also comes from Anthony. How come so many banks don't know about establishing a solo 401k in their financial institution? Is there a list beyond Solera in a town or city near you? This is a great question, Anthony. And we talked about this, something similar on a Q&A last week, which is how come most financial advisors don't know about the solo 401k? You know, the financial institutions, especially the legacy financial system, is very slow to change. And they're very comfortable in the way that they've been doing things for a really long time. So from a big bank's perspective, they want to, generally speaking, manage as much as they can. So if there's a 401k, they want to manage it. They want to say what investments are allowed and what are disallowed. They want to control the money flowing in and out. Quite honestly, it's very expensive for them from a compliance and administration perspective to keep track of everybody doing tons of different transactions. So what they usually will do is just squash it and say, we're not going to offer that at our bank, or we're not going to put our money or human resources into our compliance team trying to understand the structure. We'll just say, no, thank you. That's what we have found is quite common. But even if there are banks that they try to understand it, the solo 401k is a unique financial vehicle because of the power that you have as your own trustee. And unfortunately, over the years, we've seen some of the major banks make major blunders when it comes to dealing with client assets. Maybe they will open the account and say that it's okay, and they say that they pass it through their compliance department. And then 6 months later, the account holder gets a notification that the bank decided they couldn't support the account, so they froze the funds. Or I had one client a couple of years ago send me a letter saying, I opened my 401k trust bank account with a major bank, and they didn't understand the structure, even though they opened the account. So they sent my funds to unclaimed property at the state. And now I have to go to my local state government and try to figure out how to get my money back. It can be a really big mess. So we have chosen to train banks that we know the CEOs, we know the vice presidents, we know that when we teach them about the structure, they will make sure all of their new staff and existing staff understand the solo 401k. So that's why we recommend those banks. They have dedicated solo 401k departments. They specialize in working with self-directed investors. And the two banks that we really like are Titan Bank in Texas and Solera Bank in Colorado. Both banks, of course, are FDIC insured. They have robust online banking, mobile apps. You can do the mobile check deposit. They will waive service fees, monthly fees for Neighbors Group clients, and they have clients in all 50 states. So we find that they do a great job taking care of our clients, and they understand the structure. They've taken time as part of their bank development to understand and be supportive of the structure. But I certainly hope that more banks will come on board with the solo 401k. I mean, we've been doing this for 15, 17 years now. I certainly hope that as the world continues to change and people discover how important entrepreneurship is and being in charge of your own money, that more banks will come on board too. So thanks so much, Anthony, for that question. I do think it's a good idea to use Solera and Titan because they understand the structure. That's going to certainly be like hitting the easy button for you. Okay, Julia, I know you had a question here. Let me jump in. You said, while you're addressing, hold on, I'm posting these as questions, so we'll be able to have them time-stamped for you guys. Okay, so Julia says, while you're addressing the signature pages, could you tell us whether all of the date fields in the signature pages need to reflect the day they are signed or the day the plan was established? Great question, Julia. Use the date you are signing. That's the date you're making everything official. Use the date you are signing. And next question from Julia. Do the beneficiaries simply receive a payout of the 401k sums and are responsible for the full taxes on that as regular income? Or do those funds have to roll over into their investment accounts? It depends. This is something you'll want to work with your estate planner or your legal counsel on. The beneficiaries designation form just says who it gets the assets. It does not say how. Most estate planners will probably recommend that those retirement funds roll in to something like an inherited IRA to avoid a big tax hit right away. But that's not required. A beneficiary may take a full distribution and pay the taxes. Whichever structure is right for you and your heirs is going to be a discussion for your legal counsel or your estate planner. This beneficiary designation form says who gets the money, doesn't say how. So work with your estate planner on that. Great question there, Julia. Okay. So now we have a series of questions here from Lipsy. So let's cover this series of questions for you, Lipsy. Question number 1, I will be opening a solo 401k with my current LLC and making employee and employer contributions. Awesome. The current LLC will have a final tax year of 2020. The company is going to dissolve. No problem. I will be opening a new LLC in January 2021 in which to invest in real estate. I would like to open a solo 401k account for that company as well so I can contribute in 2021. Or is that needed? Are the funds transferred? How does this work? What are the fees? Really good questions, Lipsy. So if I'm understanding correctly, you have a business right now and you would like to open a solo 401k for this business. But this business is going to close at the end of this year and you're opening a new business next year. That's totally fine. You actually don't need 2 401ks. You just need one. So at Neighbors Group and solo401k.com, we can support you in updating the sponsoring business at any time. And what that means is you are changing the business connected to the 401k. The reason you're allowed to do that is because you are the common denominator as the business owner and the trustee. So you're allowed to change the business that you have connected to the 401k plan. Now, I want to show you, it's very easy to do that. Essentially, you just need to email us and say, hey, I've got a new business, but I want to show you in our knowledge base exactly how you can communicate that to us and what information we'll need. So if I'm here in the Solo 401k dashboard, Lipsy, then I'll click on support. So that is our knowledge base. And that's going to open at support.solo401k.com. And I'll just type in update, like you want to update the sponsoring business. And I think we've got in here, hopefully, how do I change the business for my Solo 401k? So this article will walk you through exactly what we need to update the business connected to your solo 401k plan. It's a simple document update and it is complimentary. So there is no cost for us to update the documents to change your sponsoring business from one to another on the same solo 401k. This is really beneficial for you because we're going to get a tax ID number for your 401k plan, and you're going to open bank accounts or brokerage accounts in the name of your 401k trust. You don't want to have to move those assets around, and you don't have to. So once we establish the solo 401k, Lipsy, for you for business number 1, then in January, when you open business number 2, send us an email. Let us know that you have a new business, you'd like to update the documents, and we will make that change for you. And then you don't have to transfer any assets. You don't have to open new bank accounts or new brokerage accounts for the 401k. All of the 401k assets can remain where they are. And it's just an administrative update on the back end for your 401k. So there are no fees for updating the 401k documents to change your sponsoring business. And we can do that for you at any time. Okay, Lipsy, your next batch of questions here. I would like to close on a fix and flip property in February with the new solo 401k plan, possibly using private lending. How would that work? Can the 401k plan purchase with a down payment of 10% and 90% financing? What are the IRS rules? Will I have support for that at Neighbors Group? Great questions here. And I want to share my screen again because I want to tackle how you've got a lot in here. So the first is about the fix and flip property. Now, if you've been with us for a while, then you've probably heard us say before that your retirement plan is not a business. Your retirement plan is a passive investment structure. The IRS does not want you flipping properties in a retirement plan. In their world, they think that that means you're running a business with your 401k funds, and they may try to tax you. If you are a savvy real estate investor and you find 1 or 2 deals per year that you would like to buy, rehab, and resell, then that's okay. And that's different from running a flipping business in your 401k. So to recap there, the first part of your question, Lipsy, buying and rehabbing and reselling 1 or 2 properties a year in a 401k is probably okay. If you start going above and beyond that, and this is every 60, 90, 120 days, you're churning these properties and flips, the IRS is going to tax you on that income because they view that you are running a business with your retirement plan, and you're not allowed to have an unfair advantage over normal investors. So if the IRS believes you are running a business with your 401k, they will collect income taxes from you. If you've just got 1 or 2 deals a year that as a savvy investor would benefit your retirement plan, then that's probably okay. But now let's talk about lending. And I want to share a couple of resources here with you. So if we go back to our knowledge base, first of all, then let's just type in loans. So right here, Lipsy, you'll see that we have what kind of loan can I get to buy real estate in the solo 401k? That's a great article to go through that details exactly how loans work in the solo 401k plan. And then if I do a search for real estate, you'll see that there's more articles. So really getting into this knowledge base, clicking around, doing searches for articles is really going to open up a whole new world for you to be able to educate yourself and empower yourself on all of the different things you can do with a solo 401k. We are absolutely here to help. We do lots of free trainings. And if it's, 2:00 in the morning on a Saturday and you're trying to figure out how to put together a deal, you don't have to wait for us. We want to make sure you're empowered to get as much done as you would like in your solo 401k. So Lipsy, what I'm doing now is I did a search in our knowledge base for real estate, and we also cover deals. So we cover examples, how to buy real estate, how to title real estate, how do you buy real estate, rolling over real estate. What about buying real estate that has a business already on the property? What kind of loan can I get to buy real estate? The short answer, Lipsy, is that all solo 401ks and IRAs that need to get a loan or a mortgage on buying property must use something called a non-recourse loan. Let me repeat that. Non-recourse loan. It's a special type of loan where there's a higher down payment because the only recourse in the case of a default is that the lender can take the property. And I just pulled up here, we have a whole page on non-recourse loans on our website. I'm going to put it into the chat here, Lipsy, so that you can reference that later on if you're watching the replay. This is going to walk through exactly how non-recourse loans work, how to qualify, what the LTV is, which can change, of course, from lender to lender. But this is going to give you a lot of information on the non-recourse loan. Additionally, we have a list of non-recourse lenders, so different banks that we know will support and write a loan for a 401k plan. I'm here on our website at solo401k.com. If I put my mouse over invest and then real estate, I can see we've got a list of non-recourse lending resources. So this is going to give you information about various banks and private firms that will support a solo 401k getting a mortgage. Now, one other item that I think will be really helpful is if I'm here on our network, that's solo401k.net. If you haven't come into the network yet, by all means, come and join us. There is so much going on in here. This is a great place to network with other solo 401k investors. It's a wonderful opportunity to post questions. Our experts are in the network all day long answering questions. So it's a nice way to get your questions answered quickly. And then we also host these events. And if I go to events and past events, so these are trainings we've already completed. We did multiple trainings specifically about buying real estate in the solo 401k, and one training in particular, literally about non-recourse loans in the solo 401k. In this training, we interviewed Creighton and Avram from Solera Bank. They are one of the banks that we recommend. They understand solo 401ks, and they are also a non-recourse lender. In this training, they went through with us exactly what they're looking for on why they approve deals, why they deny deals. We went through sample numbers of deal structure. This is going to be a great resource for you, Lipsy, to review. I'll post this in the chat for you as well. So non-recourse lending training. So that's going to be a great resource for you as well, Lipsy, so that you can learn a little bit more about non-recourse loans. Just to quickly touch base on your questions, 10% down and 90% financing is not going to happen in a non-recourse loan. Or I would be very, very surprised if it did. Most lenders are going to be banks or private parties. They're typically going to look for 40% down or 50% down. So that's 50 to 60% LTV on the deal. And remember, it's because they need to mitigate their risk. If the lender only can foreclose on a property, they can't garnish wages, they can't put a judgment on you personally, then they have to be able to mitigate their risk on the loan. It's very common for a non-recourse lender to require 40 to 50% down and adequate cash reserves in order to process the loan on that deal. So make sure that as you're putting together your investment strategy, that you're selecting deals that are going to, fall within that range where you're comfortable putting 40 to 50% down so that you can get the loan on the remainder. There's those articles that I linked to on our website in the knowledge base and the training cover IRS rules as well. And yes, we're absolutely happy to support you. For transparency, what we cannot do is we cannot review your purchase agreement. We are not your loan underwriters. But we are absolutely happy to point you in the right direction, make sure that from a logistics perspective, you have resources available to you for who are good non-recourse lenders, and that you're well armed with the information and education on how to move forward powerfully with those deals. So those are great questions. Thank you so much, Lipsy. If you are ready to get started with your solo 401k with us, then complete your application online, and we'll look forward to digging into these questions with you even further. Okay, next question. This next question comes from Matt. Matt looks like a couple of questions here. So Matt asks, do you allow voluntary after-tax contributions in addition to the Roth solo 401k contributions? Yes, we do. And then question number 2, I have a friend who owns a spray foam business. Sometimes I'm a 1099 subcontractor for him. Can I use my solo 401k to invest in the business, or is that prohibited since I sometimes work for him? I'll start with a disclaimer. This is a Q&A call, so I'm not magically becoming your attorney or your tax advisor. Matt, I strongly recommend that you get counsel or guidance from your legal advisor, your tax advisor, to ensure that this is not a prohibited transaction. On its face, I don't believe that this to be a prohibited transaction because you are not an owner in the business. You are a subcontractor. If you had ownership in your friend's spray foam business, I would say that yes, you're probably dancing on the line of a prohibited transaction. But just as a subcontractor, you're probably okay. However, you may benefit personally from your 401k's investment. Maybe they get more business and then you get more 1099 income. Potentially that could be a prohibited transaction. I wouldn't be the one to make the final call on that. So I do think that you want to consult with your attorney or your CPA to see what they have to say, since they are going to be the ones that will be able to guide you from that compliance perspective. If you need resources to CPAs or attorneys familiar with the prohibited transaction rules or that can guide you, you can find those in our knowledge base. Just do a search for attorney or CPA, and we keep that list updated in the knowledge base at support.solo401k.com. Great questions. Thank you, Matt. Our next question comes from Henry. Henry asks, I need to make a deposit to my solo 401k account before the end of the year, but don't have a bank account set up yet. Can you assist me in doing that? Yes, Henry, happy to. Let me show you in our knowledge base exactly how you can proceed. So, Henry, if you go to your solo 401k dashboard and you click on support, this is going to open the knowledge base at support.solo401k.com. And then I'm going to do a simple search for bank account. And you'll see we have several articles here, bank account recommendations, bank account questions and answers, how to open a Solera bank account for your solo 401k, tips to open a trust bank account, how to open different bank accounts for Roth versus pre-tax funds. Henry, I would recommend that you use this knowledge base to make sure that you are following our instructions and our best practices on opening a bank account. Earlier in the Q&A today, we covered that a lot of bankers are not familiar with the solo 401k. A lot of banks are not supportive of a solo 401k. To save yourself a lot of headache, we recommend that you use one of the banks that we train. and you can find their information right here in the knowledge base. We give you the contact information for both Solera and Titan, as well as links to their online applications, which are really quick and easy. Solera, I think right now needs about 3 to 5 days to get the account open. Titan told me yesterday that they are giving account numbers and getting accounts open in 24 hours. So Henry, I think that if you are feeling a time crunch, then Titan is probably going to be the fastest way to get a bank account open. And I mean, as you can see, they are very supportive of these accounts. They, right in the very beginning, will ask you about the 401k. So it's really a nice way to get started with your bank account application online and to know that the banks are going to support your solo 401k plan. So Henry, I would recommend that you follow those instructions, contact Titan or Solera so that you can get the account open. If you would like to take the swiftest path, I think at this point, Titan is probably your best bet. Use that link, complete their application online, and I'm sure that they will do everything in their power to get the account open for you as soon as possible. Thanks so much for your question, Henry. All right, next question comes from Clint. Clint asks, do I need to open the accounts that underlie the 401k plan in 2020, or is that by the tax filing deadline? Great question, Clint. You need to have the paperwork from us by 2020, by December 31st. And I know you do already. We prepared your documents, so you are qualified. You have until tax day to open and fund your bank and brokerage account for the solo 401k. So you could just go and enjoy Christmas, pick back up on this in the first week of January. Next question from Clint. Do I need to fund the accounts in 2020, or is it by the tax filing deadline? Fund by the tax filing deadline. So guys, as a reminder, what you need from us by December 31st is your paperwork. What you need and then the rest you can do by tax day. You can open your bank accounts, you can open your brokerage accounts, you can fund those bank and brokerage accounts with contributions. You have until tax day. The only thing you need to get done by December 31st is to get your documents from us. And Clint, you already have your documents, so you are good to go for 2020. Clint has another follow-up question here. At this point, we would both open non-Roth 401ks in the maximum allowable amount. You recommend keeping them in separate accounts. Are both accounts owned by the trust? I do not see much to assign my name or her name to the account application. Is that because the trust owns everything, and because Linda is my spouse, she has marital rights to everything in the trust? Should I have set up the trust with her as a co-trustee as well, or does that not matter? Great questions, Clint, all in one. Let's tackle them one at a time. So yes, we recommend that participants keep their funds in separate bank or brokerage accounts. It just makes your life a lot easier when it comes to paperwork and keeping the records for your 401k plan. You are your plan administrator for the 401k. That means it's your job to keep a record of the money coming in and going out of the 401k. But you need to know whose money is whose. If you and your spouse are in the same solo 401k, which is totally fine, then you still need to keep track of whose money is whose. So Clint, for your case, for example, if Linda made a contribution or a rollover, then you need to know what in the trust funds is Linda's versus what is yours. And the easiest way to do that is for you each to have a bank account. Now, some banks require that you are each trustees to have two bank accounts or to have separate bank accounts for each of your funds. Some don't. You can open, for example, with Titan, you can open two bank accounts, and then in the online nickname for your Titan online portal for your banking, then you can simply write 401k trust -Clint, 401k trust -Linda. and then put each participant's funds in the appropriate account. That's totally fine. You do not need to be co-trustees, I don't think, in order for that to happen. You would just, in the online setup process with Titan, you can tell them how many accounts you want, and then you can add your nicknames right in the account application process. So Clint, I think that in this case, it is a good idea to have at least 2 bank accounts, one for each of you or one for each of your funds. And yes, these are both owned by the trust. Your 401k trust might have multiple bank accounts, multiple brokerage accounts. I tell people, think about your 401k trust like an umbrella, and it can have unlimited depository, checking accounts, investment accounts underneath it. The trust is the holding structure, and then you can have as many of these little sub accounts as you want. That makes your record keeping a lot easier. Great questions, Clint. Thank you so much. Okay, next question comes from Bill. Bill asks, can I add my wife to my solo 401k plan for 2020 or form a new one for her? How would I do it and the cost? If I did so, I would want her to contribute her salary of $26,000 to her plan. Really good question here, Bill. Before I dig into this, I want to share my screen. We're going to go back to the 401k network, because we did a training all about spousal inclusion in the solo 401k. I'm going to put a link to the chat here. So we'll say spousal inclusion webinar. This is a really helpful training to go through for you, Bill. We cover the intricacies of why you might want to include a spouse in your solo 401k. Namely, to max out contribution limits and get a bigger tax deduction, which I think is not to be ignored. So for you, Bill, an easy decision here is, if you work in the same business, then you have the same solo 401k. 401k plans are for businesses. It's a company retirement plan. If you and your spouse work for the same company, which is your small business, then you will both participate in the same company retirement plan. So, Bill, you mentioned you want your wife to be able to contribute her salary. If she is earning her salary from your business, then you guys would have one 401k plan for your business. You each can have a sub account. Just like we just covered in the previous question, you each can have a bank account for your 401k funds, and then you make your contributions to your bank account for the 401k plan, and your wife makes her contributions to her bank account for the 401k plan. One 401k for the business, different bank accounts for each of you. That's going to make keeping track of your records much, much easier. Because if you are both sharing the same solo 401k, because it's for your joint company, then there is just the cost for setting up one solo 401k plan and maintaining one solo 401k. That's it. We charge at the plan level. So we only charge a setup fee per plan, and we only charge an annual maintenance fee per plan. If you guys work in the same business, you just need one solo 401k. Great question, Bill. Thank you so much. Okay. Next question comes from Daniel. Daniel says, I signed up with you guys on November 30th. The customer service has been great, by the way. Thank you, Daniel. I'm having trouble getting Gemini to approve my trust account. Gemini is a crypto exchange account, by the way. It's been about 2 weeks and I still haven't got it. I noticed in your paperwork how to buy cryptocurrency that one of the ways is with a crypto custodial account. How would this work and how much does it cost? Great question, Daniel. So we covered this in a Q&A yesterday. We're in a pretty raging bull market right now when it comes to Bitcoin. And inevitably, what that means is the volume of people trying to open accounts can rise exponentially. So Gemini, Coinbase, Kraken, Bittrex, wonderful organizations They are running 2 to 4 weeks to open accounts right now. They have a lot of applications that they're getting through. They have to do extensive compliance. So I know that they are just working through their applications as quickly as possible. For some of our clients that don't want to wait or don't want to have to deal with figuring out custody for cryptocurrency, which is a digital bearer asset, then our Bitcoin Pro storage platform is definitely something that you should consider. And I will share my screen. I know you guys see me do this about 15 times every Q&A call, but I'm going to share my screen, and I'll also post a link to this in the chat. If you go to neighbors.com/Bitcoin Pro, we created something called Bitcoin Pro Storage. It is a fully insured custodial platform where you can buy and hold Bitcoin, Ethereum, and other cryptocurrencies. It's not a trading platform. So I want to be very upfront and clear about that. This is a custodial account if you would like to add Bitcoin and other cryptocurrencies to your portfolio so that you can hold them for the long term. This is not a trading solution. If you are interested in adding Bitcoin and other crypto to your portfolio, I think it's very valuable to consider. Certainly right now, there is so much happening in the Bitcoin world. Every day we're seeing new billionaire hedge funds, publicly traded companies, insurance companies starting to allocate to Bitcoin. We've been teaching clients to how to purchase Bitcoin in their retirement plan since 2013, when Bitcoin was $70. I haven't looked at the price today, but right now it's $23,500. That's quite an increase. So even the clients that came to us, late, and they started buying Bitcoin at $5,000 or $7,000 or $11,000, now it's $23,000 or $23,600. Bitcoin is a very new asset class. It's a nascent asset class, and it has a small market cap. That means the price can move in big jumps, okay? The Bitcoin rise is spectacular. It also has spectacular corrections. So you need to make sure that you are only investing in your portfolio what is considered your risk capital. Do not open credit cards to try to buy Bitcoin. Do not get a second mortgage to buy Bitcoin. This is risk capital. Bitcoin is also very new, okay? It's a technological asset. It's a digital bearer asset. It's like digital cash or digital gold. That means if it is stored improperly, or if you lose the passwords, or the ability to get onto your accounts, or to get to your wallets, it is gone. There is no recovery. And we've already lost a couple of, not we, the Bitcoin community has lost a couple of million Bitcoin this way. There's people, if you just do Google searches, horrendous stories where they had a laptop that had 100 Bitcoin on it and they threw it away because they didn't think Bitcoin was going anywhere. And now that laptop that's in a landfill somewhere would be worth $100 million. It's very important when you're putting together your Bitcoin strategy that you understand the technological complexities of this asset. That's why we created Bitcoin Pro Storage. So we work with a qualified custodian. The holdings are fully insured. So that way it's quite easy. For you, Daniel, you would submit the application here right online. And then we have your account open usually in 1 to 3 business days. You send a wire to your account, and then we execute on a trade call, and your holdings are in a air-gapped multi-signature offline cold storage wallet. If all those words just kind of flew past you and you weren't sure what any of them meant, then you seriously need to consider not holding your own Bitcoin. Like I said, it's very technologically complex. That's why we created this program. It is a fully insured program. Now, this page here that I have posted, gives you information about it, including our fees. Or the custodial fees. There are platform fees and there are insurance fees that are charged on either a one-time basis for the platform fee or a monthly basis for the insurance fee. So Daniel, I think you want to read through this information here on neighbors.com/Bitcoin Pro and determine if that is a good fit for your particular holdings. Okay. I know that was kind of long, but I get excited about Bitcoin. So anyway, next question comes from Marie. So Marie asks, besides contributing to the solo 401k, can I also contribute to a Roth IRA or traditional IRA for the same year? Yes, that is possible. Always double check your numbers with your accountant so you're not over contributing. Usually the IRA does not affect how much you can put in the solo 401k or vice versa. So yes, you should be totally fine to contribute to all of the above, but the IRS has, some intricacies, some idiosyncrasies, especially with Roth IRA and income ceilings. So yes, you can contribute to multiple accounts in 1 year, and always check with your CPA on your numbers. Good question there, Marie. And we are coming up to the end of our time, but we're gonna go as quickly as possible here. So Robert Lee says, hi, Robert. Oh, Robert, I know you. Okay, Robert says, hi, Rachel. Thank you for everything. You're awesome. My CPA says to contribute $57,000. I know, Robert, you're doing after tax, or maybe you were doing pre-tax. We were still determining that the other day. My net income should be around $140,000. Is this something I can do? I think I remember for single member LLCs, I can only contribute 20% of my net income. Also, he recommended to deposit the least amount possible into the pre-tax. So if I deposit the rest into Roth or post-tax, when or how do I have to pay taxes on that? When taxes for 2020 are due? Good question. Okay, so I'm going to go the end back to the beginning questions, Robert. So as far as when taxes are due, when you're doing post-tax or Roth contributions, you just don't count those as a tax deduction on your tax return. So you don't get the tax deduction, you just pay the taxes on whatever that income is. Now, Robert, determining your actual numbers is something I think you need to work with your CPA on. But yeah, if you're making $140,000, then you should be able to put in a good chunk of that to pre-tax, whatever you and your CPA determine are the right numbers. And then the rest can be post-tax or Roth. It's up to you and your CPA to determine how much of that $57,000 you want to be pre-tax. So I will leave that conversation for the two of you. And then what you might want to do for calculations is say, how much do I want to put into pre-tax? Let's say it's $20,000, for example. Okay, I'm going to put $20,000 in as a pre-tax contribution, and then I'll put $37,000 in as an after-tax contribution converted to Roth. So then you've got your full $57,000, $20,000 of it was pre-tax. That's one suggestion of how you might slice and dice these contributions here. Determining your exact numbers, Robert, and what your tax liability will be is going to be for you and your accountant to do. So you do not get a tax deduction for your Roth or after-tax contributions. So you pay the taxes on that income with your 2020 tax return. Great questions, Robert. I'm so glad you're drilling down into this stuff. Okay, so Yunhee says, to Lipsy's question, will I need to change bank accounts as the name of the business will change? No, your bank accounts for the 401k trust are in the name of your 401k trust. So if your business changes, it does not affect your 401k trust. Remember, they are two separate entities. So when we establish your 401k plan, we get a tax ID number for that 401k, and it has a name with the IRS. You use that information to open a bank account or brokerage account for your 401k trust. So if the business changes, that does not affect your trust name. So Yunhee, you do not need to change your trust information just because your business information changes on your 401k plan. Great question. Okay, next question comes from Jorge. Jorge says, is the Bitcoin Pro storage available for Checkbook IRA LLC accounts as well? Yes, absolutely. It is. So if we go back to that page here, I'll just show you the application. So on the application here, Jorge, you can see it'll say right here, is this coming from a solo 401k, IRA LLC, a living trust, or a regular LLC? So you would just put in this little box right here, and on the right here, it'll say, bam, entity information, limited liability company includes IRA LLC. And then you'll input the rest of your information. So Jorge, I know we were doing an IRA LLC for you. Yes, the Bitcoin Pro Storage account is available for your IRA LLC. Really good question. Next question from Jorge. Is the Bitcoin Pro Storage account open 24/7 so I can transfer Bitcoin to Coinbase for trading at any time of the day or week? It is not open 24/7. We work with a qualified custodian. So with that, there are certain rules that have to occur. If you, for example, have Bitcoin on your Bitcoin Pro Storage account and you want to move it to Coinbase, there's a process for that to happen. We need you to sign, give us the wallet address, or give the custodian the wallet address where the assets will go to. You have to sign attestation letters and indemnification letters saying that you're giving the custodian the correct information to send those funds to. This is not a trading account. The Bitcoin Pro Storage account is meant for what in the Bitcoin world we call HODL. That's hold on for dear life. These are your long-term holdings. This is your, gold bars that get, dug up in the backyard. That's where they're buried. You're not trying to touch them. The Bitcoin Pro Storage account is for your long-term holdings because there is a custodian involved. There are insurance procedures. So in order to move funds and assets around, we have to follow specific protocols for that custodian. So it's not a trading account. Really good question, Jorge. Thank you for the clarification there. And then next question from Jorge, and this is going to be our last question for today. Do you suggest two-factor authentication for storage in the Bitcoin storage vault? I think you're probably talking about Coinbase or another exchange, in which case, yes, I think it's always a good idea to have the maximum layers of security possible. Exchanges are not where we recommend leaving your assets. They are honeypots for hackers, and they're a big target for people that want to try to get crypto. So I think wherever you can add extra security to those accounts is a good idea. So I think that that's going to do us for today, friends. Thank you so much, as always, for joining us. We are on for tomorrow. That's the 24th. Oh, hold on. Okay, hold on. Yes, Julia, thank you. Okay, Julia has one more question, and then we're calling it for real. So Julia says, you had said to use the actual date of signing for the signature pages. While I'm filling out an application for my TD Trust brokerage account, however, I know I should use 1/1/20 for the date of formation of my retirement trust. But what do I use? Where do I find the date of last amendment to the trust? So Julia, for you, since you did a restatement, your date of amendment is the date you signed up with us and the date you got your documents. Hopefully those were the same day, unless we got your application at night. But then, your date of last amendment is the date that you signed up with us, because that's when we prepared your documents for you. Okay, and then, Jorge, you're so sweet. Jorge says, I know you will be here tomorrow and the 25th. Wow. Well, you guys your businesses, don't sleep, so we're here to help. We know what it's like to be small business owners. You're trying to squeeze in as much as you can with the time that you have, and we want to be here to support you for that. So I hope a Merry Christmas to all Neighbors Group people. Thank you. I deeply appreciate the help received from Hannah, Alana, and yourself to get my account set up. Thank you, Jorge. The feeling is very mutual. We love working with you. Happy New Year. Be safe. Cheers. Oh, and you're sharing the YouTube videos with friends and family. That is awesome. So glad to hear. Yes, please feel free to invite anyone that you think might benefit to these Q&A sessions and to the network. Solo401k.net is free. It's open to anyone that is interested in learning about self-directed investing. We love to do these trainings and support for you guys because, hey, retirement accounts can be weird, and we want to help you feel empowered to move forward so that you can really be in control of your own financial future. You guys are awesome. We will see you tomorrow. That's the 24th at 3 p.m. Eastern time for our daily Q&A session. Have an awesome rest of your day. I'll see you.